GitLab stock is down 70% from its IPO and roughly 40% year to date. And honestly, I think this might finally be the right time to invest. If you are already a shareholder or if you have been watching this stock for a while, I want to walk you through exactly how I'm looking at GitLab right now. I'll talk about the technical setup, the fundamentals and balance sheet, the AI concerns that push the stock down, and my valuation and long-term upside. But before we go further, this is not a financial advice. Make sure you always do your own research before investing. Alright, so let me tell you why I'm considering GitLab right now. I've actually been watching GitLab for a very long time. When the stock was around $50, I thought of buying it. Then it dropped to around $40. I still waited. Then it fell into the $30. And even then I didn't buy because I was waiting for what I call a perfect setup. I like to invest in companies when the business is strong, the balance sheet is healthy, and the market is completely ignoring the stock. And right now, GitLab is starting to look exactly like that. So let's talk about the technical picture first. After this huge drop, the stock is now trading below all major moving averages on both the daily and weekly charts. That alone tells you the stock has been under serious selling pressure. But the thing that really caught my attention is the RSI on the weekly chart. Right now, it's below 30. That typically means the stock is extremely oversold. Now, oversold doesn't guarantee a bounce immediately, but historically, this is where long-term investors start paying attention. Personally, I like to buy great companies when they are oversold and ignored by the market. That's where some of the best long-term opportunities come from. If you have been following my channel, you know this exactly how I approach investing. Some of my stocks in my public portfolio have returned over 100% returns, and there are also multiple multi-baggers in my other portfolios. And my strategy is simple. I follow companies for a very long time, stay patient, and then pull the trigger when the setup finally appears. And right now, GitLab might be reaching that point. Alright, now let's look at the fundamentals as well. GitLab's balance sheet actually looks very solid. The company currently has about $1.26 billion in cash with zero long-term debt and around $222 million in free cash flow. That's a very healthy financial position. In fact, despite aggressive investment in growth, the company is already cash flow positive. That's something you don't see with many software companies at this stage. And the balance sheet continues to improve. Total equity increased about 27% over the past year, and current assets are well above liabilities. So financially speaking, GitLab is actually getting stronger even while the stock price has been falling. So the obvious question is, if the company is doing well, why did the stock fall so hard? A big part of it comes down to the AI fears. Investors started worrying that AI tools might disrupt traditional software development platforms. But ironically, GitLab is actually integrating AI into its own platform. The company is embedding AI across the entire software development lifecycle. That means helping developers with code creation, testing, security, compliance, and development. So instead of being disrupted by AI, GitLab is positioning itself to benefit from the AI era, especially as companies move toward AI-driven software development workflows. Now, let's also look at the actual business performance. GitLab recently reported $260 million in quarterly revenue, which was 23% year-over-year growth. And that was actually better than analysts expected. Large customers are also growing fast. The number of large enterprise clients increased significantly, including major growth among their biggest accounts. Another important metric is their net retention rate, which came in at 118%. That means existing customers are spending more money on the platform over time, and their forward-looking revenue pipeline, known as remaining performance obligations, also grew over 20%. All of this suggests that the company still has strong demand and future growth potential. Another major development is that GitLab recently authorized a share buyback program. The company is planning to spend up to $400 million buying back their shares. That's about 10% of the company's market cap. Think about that for a moment. A company with no debt, strong free cash flow, and strong growth is now buying back its own stock. That sends a pretty strong message that management believes the shares are undervalued. And it also creates support for the stock during pullbacks. Alright, now let's talk about the upside potential. Based on earnings growth estimates, analysts believe GitLab could double from recent lows. Wall Street currently has an average one-year price target around $38, which means from current levels that represents roughly 68% upside. But when I run my valuation model over a 5-year period, I see even more potential. My projections show about 131% upside over the next 5 years. That would put the stock above $50. And that's assuming reasonable growth, not overly optimistic projections. So here's what I'm personally planning to do right now. After watching this stock for years, I finally think we are entering a strong buying zone. So I'm going to start building a position in GitLab. Not all at once, but slowly. If the market gives us more volatility, I'll continue adding shares over time. Because when high quality companies become oversold and undervalued, that's when long-term investors usually get the best opportunities. So to conclude, I believe GitLab may be entering a very attractive buy zone and I will be opening a position soon. But again, please don't take this as a financial advice and always do your own research before investing. Before you go, I would like to hear from you. Do you currently own GitLab stock? If you do, what's your average price and what's your exit strategy? Do let me know in the comments below. And if you enjoy deep dives into undervalued tech stocks and long-term investing opportunities, to subscribe. That's all for this video. Thanks for watching and I'll see you in the next one.